Have you ever wondered whether you should buy Tesla stock before or after the split? A lot of retail investors have been awaiting the upcoming split, while others have been clamoring to buy the EV company's stocks before the split. Stay tuned and keep watching to find out why. While a great number of people have been anticipating the upcoming Tesla 3-for-1 split, others are trying to buy the stocks before the split. Tesla stock is undeniably one of the hottest stocks in the market today. Of course, there are still some that think the company's stock is overvalued. In today's video, you will find out why you should buy Tesla stock right now before the 3-for-1 split. In the recent shareholders meeting, Tesla shareholders voted on a proposed 3-for-1 stock split and approved it with a strong majority, over 815 million shares for and just 9 million shares against. The vote increases Tesla's authorized common shares from 2 billion to 6 billion. Tesla reports that it had just over 1 billion common shares outstanding as of June 6, 2022. The EV company then announced that it was moving forward with its 3-for-1 stock split, and the stock dividend is coming on August 24th. Tesla's board issued a press release to announce that the stock split will take place on August 24th for all shareholders of record on August 17th. According to the press release, Tesla announced that the board of directors has approved and declared a 3-for-1 split of Tesla's common stock in the form of a stock dividend to make stock ownership more accessible to employees and investors. Each stockholder on record on August 17, 2022 will receive a dividend of 2 additional shares of common stock for each then held share to be distributed after the close of trading on August 24, 2024. Trading will begin on a stock split adjusted basis on August 25, 2022. Here comes the big question. Should you buy the stock before or after the split? Of course, it's impossible to say what Tesla stock will do immediately before or after the stock splits. It is safe to say, however, that since the split has been announced, most of the impact of the split has been largely baked into the current trading price. In other words, investors in the know are basing their purchases and sales of Tesla stock with the split in mind. Some experts predict Tesla stock price to soar after the split, so it might just be a good idea to buy before or during the split. There are some quite high-priced predictions for the company's stock. Of course, that is not to say that said predictions are accurate, especially when it is currently sitting in the $800 to $900 range, when valuations are around $1,000. Still, there is a chance that the economy will be a bit better after the split, so a high stock price will be possible then. According to most analysts, the outlook for Tesla over the long term appears positive. Even if the company's growth trajectory continues on an upward trend, however, it is unlikely to see the amount of growth the company has experienced in the last 2 to 3 years. This is true of most companies, particularly those in the technology sector. They grow rapidly at first, but then growth slows down as more competitors enter the market. But slower growth is still growth, and analysts seem to agree that Tesla remains well-positioned to continue to grow over the long term. Investors should be prepared for some bumps along the way, however, if the company's history is any indication. Simply put, a stock split is when a company splits an existing share into multiple new shares. If a company splits 2-for-1, the share price will be cut in half, but the number of shares outstanding will double. Firms usually do stock splits when a share price has increased substantially. The split will bring down the price of the stock, which attracts a wider range of buyers. Investors who previously couldn't afford a share might now be tempted. But a split does not change the current value of the company in any way. The monetary value of investors' holdings will be the same amount after a stock split, it is just that they will own more shares. If an investor owns fractional shares of a company, the same idea applies. If investors own half of a share of a company and there's a 2-for-1 stock split, their holdings would double, so they would own a whole share of that stock. Would you buy Tesla stock before or after the split? Why? Let us know in the comments section below. Now, how do splits affect options? If, for example, you have a call option on a stock and then a split is announced, what happens next? If you hold an options contract of a split stock, your contract will be recalculated so that it's not affected by the split. It will show the new price and number of shares, but the overall value will not change. This is known as the process of being made whole. So, in the given 2-for-1 split example, an option contract that covered 100 shares with a strike price of $100 each would now cover 200 shares with a strike price of $50 each. It may be worth noting that from 2012 to 2021, stocks in the S&P 500 rose roughly 12% on average in the year following their stock splits, according to data from Dow Jones. Those same figures showed that rates of stock splitting in the S&P 500 have ticked up in the last few years to their highest levels in nearly a decade. Excessive stock splitting has been seen at market tops in the past, especially when tech stocks topped in 2000. For example, Qualcomm had a 2-for-1 stock split in May 1999. The company then declared a 4-for-1 stock split in December 1999. Qcom stock skyrocketed more than 840% after the announcement of that first stock split in 1999. Shares surged from an April 1999 price of 21 to hit an all-time high of 200 on the first day of trading of 2000. Tesla stock price may just well possibly soar after the split, so it may be a good idea to buy before the split. Several factors may cause the share price to keep rising once the Tesla stock split in 2022 is complete. First is the increase in production capacity. It is a well-known fact that due to production limitations, Tesla had trouble satisfying customer demand for its automobiles. The lack of manufacturing capacity has caused the company's remarkable expansion to slow down. The building of 2 brand new gigafactories could well possibly change that. These additions will increase Tesla's annual production capacity from 1.05 million to 2 million vehicles. Unfortunately, the business, like other automakers, continues to deal with supply chain problems for raw materials and components like semiconductors. However, once it's resolved, it's anticipated that the Tesla stock charts will show a significant surge higher. Another reason is better margins and efficient production methods. Given how challenging and expensive it is to make automobiles, experts thought Tesla would never become profitable. Even some of the finest automakers like Ford Motor Company can only manage a gross profit margin of about 15%. But Tesla has created methods for making electric cars that are at the top of the competition, and the finished product's high quality allows premium pricing. With a gross margin of 32.9%, Tesla has much more flexibility for operating expenditures like the production of new goods and the development of cutting-edge new software innovations like autonomous driving, which can help the business stay one step ahead of its competitors. Some say that there may be little benefit to buying Tesla stock immediately before or after the stock split. The factors that make the stock attractive to investors are the company's fundamentals and its ability to remain at the forefront of the technology that will bring electric vehicles into the mainstream. Overall, a stock split can be tempting for investors because it allows them to buy what was previously more expensive stock at a much cheaper price. But investors should never buy a stock just because of a stock split. Make sure you do your research, check stock charts for the right time to buy, and focus on companies with top fundamentals that are leading price performers in their industry group. A stock split can grab headlines, but investors who buy Tesla stock should do so because of its growth and profitability. The stock could go lower over the short term, and nobody knows when a bottom might occur. Approaching your investments with a long time horizon will give a company's fundamentals the best chance to dictate your investment returns. Good companies tend to perform well over time. You can also use a dollar cost averaging strategy to slowly buy shares, blending your cost into an average that isn't too high or too low. Before you buy Tesla stock, do some research on the company and decide whether it would be a good fit in your portfolio. If you do decide to go forward, look into some of the best brokerage accounts that can help you best manage your investments. For more Tesla stock content, visit our channel and watch our other videos.